On September 11, the Securities and Exchange Board of India released a circular which called for a material change in the portfolio structure of multi-cap funds. The reaction to this announcement by the mutual fund industry and investors has been all over the place, with some praising the move while others typing away their dissatisfaction on Twitter. Such was the reaction that SEBI had to come up with a clarification in the next 2 days to explain the reason behind the change in asset allocation structure in multi-cap funds. So what happened that's leading to so much of anguish? Join me as we further our understanding of the SEBI circular and see how this might affect your current mutual fund portfolio and future investment decisions. Let's start with a quick understanding of the structure of multicaps. Multicaps are not complicated structures. In fact, there is only one condition. Multi-cap funds need to have 65% of their assets invested in equities at all times. This means the fund manager is free to decide how much of the assets needs to go into large caps, into mid caps, and in small cap companies. Very quickly, SEBI defines a large cap company as those listed companies which are ranked between 1 and 100 in the Indian stock exchanges in terms of their market capitalization. Mid cap companies are ranked between 101 to 250 in terms of market capitalization, and small cap companies are ranked 251 and beyond. This list is available on the AMFI website. Now, this flexibility of choosing how much of money is going into which company and which type of company, whether it's a large cap company, a mid cap company, or a small cap company, is what gives flexibility to the fund manager to decide what's the optimum investing decision that he needs to take on behalf of investors like you and me. This flexibility is a great story to tell investors like you and me. After all, we pay a fund management charge of approximately 1% for these insights and discoveries which can help our money grow much faster. So what are these changes that SEBI has introduced? Remember, I said earlier that the only condition for multi-cap funds is that 65% of their assets should be invested in equities. Well, that's changed now. And now at least 75% of the assets in a multi-cap fund needs to be invested in equities at all times. 65% to 75%, you might be saying, well, that's not much, that's pretty acceptable. Well, it's actually fine because multi-cap funds are generally invested in equities most times. For example, the big daddy of multi-cap funds is the Kotak Standard Multi-Cap Fund, which has over 97% of its assets invested in equities at this time. So this is not the problem. The other change that SEBI circular regarding asset allocation has made is what is making everyone's head spinning. Remember, I also said that fund managers are free to choose in which companies they'd like to invest without any restrictions on whether they are large, mid, or small cap companies. Well, that's restricted now, and herein lies the problem. As per the 11th September circular, all multi-cap funds are to necessarily invest at least 25% of their portfolio in each capitalization category, which means at least 25% in large cap companies, 25% in mid cap companies, and yes, you guessed it right, 25% in small cap companies. So why has the SEBI come out with these modified scheme characteristics? SEBI says that they have enforced this 25-25-25 asset allocation rule upon the observation that many multi-cap funds have over 80% of their investments in large cap stocks, which makes them more like large cap funds rather than multi-cap funds. They further added in the clarification that the share of small cap companies is in the lower single digits in some of these schemes. Well, is that true? Well, let's have a look at the top 5 multi-cap funds as per the assets under management that they have. Well, now that I look at it, SEBI does have a valid point with none of the top 5 schemes having more than 8% of their portfolio in small cap companies. HDFC Equity Fund and the Motilal Oswal Multi-Cap 35 Fund has over 85% of their portfolio in large cap companies with little or no diversification into mid cap and small cap companies. So from the SEBI point of view, the name of the scheme and the nature of the scheme are at completely opposite ends and are bordering at being misleading to some extent. The SEBI has also made a note that the benchmark that's used in multi-cap funds is not in line with the composition of these funds. That's because the appropriate benchmark for a large cap fund is the Nifty 50, while the benchmarks used for multi-cap funds are the Nifty 200 or the Nifty 500. So these are the three areas of concern that SEBI has raised in their clarification. One, the lack of noteworthy diversification in most multi-cap funds. Two, the divergence in the name and the nature of the scheme. And three, the use of appropriate benchmarks. But now mutual fund houses and investors are asking, is this really an issue? Mutual fund companies and a number of investors are questioning the SEBI's logic. Let's start with the first point raised by SEBI, that is, the lack of noteworthy diversification in most multi-cap schemes. The fund houses and investors feel that the entire point of opting for multi-cap funds is to have the flexibility of moving between capitalization categories depending on the present market conditions, future market outlook, and the valuations. Diversification can be done using other tools like having a mix of large, mid, and small cap funds in one's portfolio, but the objective of a multi-cap fund for investors is to build long-term wealth. Over the last 3 years, we have seen large caps and mid-small caps move in waves. For example, small and mid-cap companies were grossly overvalued in the last quarter of 2017, and many of them lost 30 to 40% in the next 12 months. Similarly, many investors feel that large cap companies are overvalued now as the Nifty P ratio hangs around 32. This is when the flexibility of changing tracks becomes more important than diversification. On the point related to the divergence in the name and the nature of the scheme, it again seems to be a point of view issue. While SEBI looks at the word multi-cap as the components of the fund, the investors might be viewing the same name more around the flexible nature of the fund. This is just my opinion, but maybe if the name was flexi-cap rather than multi-cap, the issue of the name being misleading might not have come across. Third and finally, I found the point on benchmarks really important from an investor's perspective. Now we know that multi-cap schemes use the Nifty 200 or the Nifty 500 as benchmarks. Let's take the Nifty 500 as the benchmark for this discussion. Now I pulled out the composition of the Nifty 500 in terms of large, mid, and small cap stocks, and here's what I found. Large cap stock composition in Nifty 500 is 78%, the mid cap stocks comprise of 17%, and small caps are just 5%. This is another area that seems to have upset a lot of investors because while the benchmark is 78, 17, and 8, SEBI wants these funds to mimic 50, 25, and 25. In other words, SEBI's contention of having an appropriate benchmark seems to be going against their own words. Now that we have seen the views of the regulator and the fund house, let's look at the many options available to the mutual fund companies. SEBI in their clarification note have hinted at some options. These include 1. The mutual fund multi-cap schemes can rebalance their portfolio wherein most of them will have to add small and mid caps and divest from some of the large cap stocks in their portfolio. Number 2, the funds can also merge their mid cap scheme with another scheme like a large cap scheme or a large and mid cap scheme. It's obviously not something that we want because there's been a lot of merger lately. In addition to what SEBI says, some fund houses have hinted at converting the multi-cap fund into a thematic fund or a focused equity fund where there are no or low restrictions on market capitalizations. The SEBI has given until January 2021 to the mutual fund companies to make the requisite changes. This is no easy task as that's almost 1,50,000 crores worth of portfolio that needs to be reorganized in the next 100 days across 35 multi-cap schemes which are currently under operation. Sticking with numbers, since a lot of movement will happen from large cap stocks to mid and small caps, there is potentially 30,000 crores of transfers from large to mid and small cap companies that will happen to comply with the SEBI instructions. This could lead to a spike in the stock prices of quality mid cap and small cap companies. With a lot of news and views floating around, there will certainly be a lump of confusion among many investors. Our view is that this asset allocation enforcement on multi-cap funds is not in line with how most investors manage their funds. We ran some data cuts on ET Money and found that the majority number of investors with an equity mutual fund portfolio of 10 lakhs or more have about 65% of their money in large cap companies, 25% in mid caps, and 10% in small cap companies. By that proportion, a 50%, 25%, 25% combination as required under the SEBI circular seems to be more risky for the investors as they have to put 50% of their money in mid and small cap stocks. So, what should you do as an investor of multi-cap funds? First, wait. It's not been a week since the announcement was made, so allow it to sink in with all stakeholders, including the regulator and the mutual fund companies. SEBI has already come out with a clarification, and one can expect all mutual fund houses to release some communication regarding their views and actions pertaining to this circular. Our team at ET Money too has been talking to different fund houses to understand their perspectives, and we'll certainly pack our learnings in a blog post and an email newsletter very soon. The second thing all investors can do is to have a clear oversight on what proportion of your portfolio is in large, mid, and small cap companies. I say so because while there is a rejig in the composition of multi-cap funds, you need to know how it fits in with your overall portfolio. You can easily find this out with the ET Money app, which gives you the percentages of your holdings in large, mid, and small cap companies. I hope you liked our video here. We shall continue to bring more updates on the SEBI announcement and many areas of investing and personal finance that can help you make some money or help you save some money. Happy investing to you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.